The market shows signs of softening up, but is it a false alarm like it was a few weeks ago? I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, June 21st. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos so you can know how the market is impacting your options as a home seller or buyer. Let's take a look at how the market performed this week. There are now 38 homes on the market, which is up from the 30 that we had last week. The average asking price is about the same at $2,031,000, up a little bit from the $2,018,000 that we had last week. 9 homes went pending, which is a little bit less than last week, the 13 homes we had last week, and the average asking price of those pending sales has dropped significantly down to $1,730,000, down from the $1,859,000 last week. And 11 homes closed this week, which is much more than the 7 we had last week, and the closing price average is significantly higher, $2,115,000, up from the $1,799,000 we saw last week. So we know how the market performed this week, and now we can look at the broader indicators and market trends that help us understand where the market might be heading. Before we look at those trends, if you find this information helpful, you can subscribe so you don't miss out on future updates. And you can share it with a friend also. Everyone deserves to be in the know about how their local market is shaping up. All right, let's take a look at those indicators. Inventory came back up this week. We are back to almost 40 active homes on the market, which isn't the highest it's been this year, but it is higher than we have seen for most of this year. And it's getting close to the high of this year. Homes are still going pending at a solid rate, but the raise of inventory will always make us be more aware of how the rest of the metrics are performing. With the increase in inventory, the turnover rate did drop this week. It's still over 100% turnover rate and comfortably in the normal market turnover rate, but we will need to keep an eye on this metric specifically to see how the coming weeks shape up. If homes start to sit at all, the turnover rate could drop significantly and very rapidly. Anything in the 90 to 120% range for turnover rate is pretty average for this time of year, so we're still very comfortably in that range. The over-under number continued to come down this week. Homes are now closing at about $75,000 over their asking price, which continues the trend we've been seeing for the past few weeks. This still lines up with the dip in the market from a few weeks ago, when the turnover rate fell below 80% and then it did rebound. So I still think we will see the over-under number level off at about 50,000 over the asking price in the next couple of weeks. And it could have a slight rebound after that. Either way though, with the market looking like it's slowing down slightly now, I think that we will be floating in that 50K or about 4% range over asking for a while. The average sales price continued its recent trend as well, still above the $2 million mark, but just barely, as it continues on its downward trajectory. It will probably be below $2 million by next week and land in that 1.8 to 1.9 range by next month, considering how recent pending sales numbers are performing. This week's average pending sales asking price is less than $1,750,000, so it's safe to assume that those homes will close at an average of 1.8, and that will pull our 30-day sales average down to 1.9 or lower by the end of next month. But like I said, I think we'll be under that $2 million mark by next week. In positive market news, though, the Triple Q Fund continued its growth this week. Here's the recent trend. That growth is a little slower compared to the last couple of weeks, but it's performing very well still. The tech industry is always a big driver of our market, so the growth in the fund will help to stave off any significant San Ramon housing market slowdowns. And interest rates dropped just slightly again this week, but I mean, barely pointing down at this point. It isn't a big enough shift to really affect how much buyers can afford. So this doesn't change much about how our market is going to perform, but it is always nice to see it move down a little as opposed to going in that opposite direction. The overall takeaway this week is that the market is showing signs of softening up. It showed the same signs a few weeks ago and then rebounded to a faster pace. So this could be another momentary bump in an otherwise smooth and fast-paced summer market. Or it could be the beginning of a true market cool down as our weather starts heating up. I think the prices will likely slow down regardless of how the market continues. So the real heat of the market will be measured by turnover and inventory, not necessarily on the increase or decrease of the average property value. And I think it reiterates and reaffirms the general point that in this market, it really is critical that you have a professional who knows and understands the market well when you're thinking about selling your home. Thanks for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you can stay informed about how this market continues to change and shift over the summer. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, especially in this changing market, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend, and we'll see you next week. Try and stay cool.